Let's go to the trading floor in Chicago and find out what the story is. We're starting to see some significant moves here. We have Scott Gecas standing by. He's with Wall Trading, starting to slide away a little bit on the grain market. How come?
Yeah, with the soybean market in particular, it's got a lot of downside pressure. The funds are still pressing that short side. With the export sales coming out a little bit below the expected range. The expected range was between 400 and 800. It came in a little bit lower. That's why you're seeing a lot of pressure on the downside with the soybean market in particular. On the other side, the corn's pretty much stabilizing, which is a good sign. It's very clear just with the flow coming through that, some of the traders that we've been talking to are short soybeans, long corn, until something changes, we expect that trend to continue, and it's definitely reflecting that in today's price.
All right, is the crude oil market having any spillover impact here on the corn at all, weighing it down?
You would think that it would have a much more significant impact on corn than it has right now. And that's why I said earlier that, corn is stable. That is very supportive, especially with the big drop in soybeans as well as the drop in oil. But right now, corn's stabilizing, and, that's a positive sign going forward.
So steady as she goes there, kind of. All right, and did have significant gains yesterday. Scott, we'll come back in a moment. I'll get your thoughts on our livestock trade today. We're talking with Scott Gecas, and we'll be back right after this. Scott Gecas, let's get your thoughts here on this livestock trade. China was absent again from the pork export market last week, basically almost a net zero for exports to China. And you would think that'd be a disappointment here to the lean hog trade, but it's going higher anyway today. How does that work?
Yeah, well, one of the reasons why the hog market was limit up yesterday was due to a rumor. Keep in mind, it's a rumor, no facts at all. It's just a rumor that they were going to ease up on tariffs. Now, that's significant because you've seen a big jump in hogs, but you did not see any reaction in cotton or soybeans. So that's what I mean. When you're looking at these headlines and you're looking at the rumors coming around, you just got to remember that the rumors until something is solid with coming out with facts. So you're still seeing a little bit of continuation to move to the upside in the hogs just because if a trade deal does get done, they're expected to take quite a bit of U.S. pork. They've already committed to about 26% or so of U.S. pork.
Now, also, we have had a sharp drop in the cash cattle market this week, about $4 or $5 lower than what we had a week ago. The wholesale beef trade, by and large, has been sliding here this week as far as the choice cut values. Let's see, I think we have a look at the beef cutouts from yesterday afternoon. We'll see what USDA said at the end of the day yesterday. Let's see if we can bring up that graphic. I think I've got it here, too. Choice cuts were down $1.62. So, yeah, it just backs up that thought that they've slid now for about 3 or 4 days straight. But yet you have the futures kind of stabilizing at these levels right now today, and that also seems to be somewhat counterintuitive there.
Yeah, and, with the futures in the cattle market, we've been down 8 straight days in a row. So this might just be a little bit of profit taking, a little bit of stabilization. We're going to keep an eye on that 115 level. That's a very key level to continue the uptrend or just completely break all the way down to 110. So we're going to keep an eye on that level and see where these markets are going to close.
Okay, well, Scott, thank you so much for joining us on the show here. I appreciate that very much. I look forward to our next visit. Scott Gecas is with Wall Trading. He's right there at the edge of the trading floor in Chicago.